Welcome back to the Dividend Diplomats, brother. You've got Bert the Herd over here, and you've got Hawk Lanny, and the Dividend Maniacs are here to bring you another video on two Dividend Titans. They're going to step in the ring, brother, and we're going to see who's the best dividend stock to buy, Jack. So what you going to do, Bert, when I run wild on you?
Oh, yeah, we got the Dividend Diplomats. We're bringing you Home Depot versus
Lowe's, brother, and we're going to see what is the best home improvement dividend stock for your portfolio, brother. So what you going to do when the dividends run wild on you?
I'm gonna smash that subscribe button. Give us that thumbs up. Oh, yeah.
That's going to be a little sneak preview for what the Dividend Diplomats are about to bring you coming soon for crossing that 2,500 subscriber milestone. So thank you, and let's get this to 3,000 subscribers. And we even have, if you're listening, we even have a surprise video that we're going to do. If this video gets to 500 likes, we may talk about dividend investing and Pokemon cards. Pokemon cards
and dividend investing. But the only way you're gonna see that is if we get that 500 on our video. We promise you, as soon as we get that 500 on our first video, we're gonna go ahead and bring that surprise to you. So get ready, buckle up, we're excited, but we're not doing it until you help us out.
So now it's time to step in the iron square here, the iron circle, and put these two dividend stocks head to head in another dividend stock showdown.
In our series of dividend stock showdowns, what do we like to achieve here? We are investing and we are researching dividend stocks all the time. We're trying to grow that dividend income and achieve financial freedom by having our dividend income pay for our expenses. So we're always trying to find that perfect dividend stock to add to our portfolio.
And what Bert and I love to do is help you, the viewer, the investor, hopefully the subscriber, as you are trying to make an investment decision on what is the best dividend stock to buy. And as you think about COVID and the pandemic, we really wanted to put these two dividend stocks in the ring because we've heard a lot of requests.
Yeah.
Home Depot or Lowe's? Lowe's or Home Depot? Bert, what kind of a guy are you when you go to the store?
I usually go to Home Depot. I prefer Home Depot. And what about you?
Honestly, I like Lowe's better, but I don't have one near me. So I'm actually defaulted to go to Home Depot, the good old HD.
Yeah.
Now, the question though is, who are the better dividend stocks to buy out of the two home improvement stores?
Yeah, and this sector has been hot during the pandemic, as Lanny foreshadowed earlier, because a lot of people are at home. They're not traveling. They're not spending out traveling to new locations, getting those experiences.
Jumping into hot tubs, getting COVID.
Yeah, so what you're doing is you're at home, and you're at home a lot. So you want to make those improvements to your home that just haven't had the time to do, or you haven't had the money that you can allocate some of that travel budget over here to these home improvements. So what better than to look at this sector and look at the two giants in there, Home Depot and Lowe's.
So get the hammer, get the nails, bring out your magnifying glass, the leveler, and we're gonna put the Dividend Diplomat stock screening caps on and look at the three Dividend Diplomat stock screening metrics, which are
the price to earnings ratio less than the S&P 500. You have that dividend payout ratio below 60%, but ideally, we look for that perfect 40 to 60% dividend payout ratio range. And lastly, we look at the dividend history to make sure that the company has a history of increasing their dividends and a strong dividend growth rate.
Now, Bert, it doesn't stop there. What is that bonus metric that you and I both love to bring and that they love to see?
Yeah, that special guest referee in this dividend stock showdown is going to be the dividend yield, because we don't look at the dividend yield first. We want to make sure that the company checks all the other boxes, and then we make sure the company pays a strong dividend. So Lanny, let's just jump right in. Our viewers are excited. The wrestlers are out. The entrance music has been played. Hogan's a real American. So let's get after this. Let's jump right in. Time to buckle up for another dividend stock showdown.
So the price to earnings ratio, we're going to start with Lowe's, then jump to Home Depot or Home Depot. Again, Lowe's ticker symbol is LOW. You all know the blue symbol with the big white letters for Lowe's when you drive by there. Now, Lowe's has had a great year. Their stock price has surged up to $157 stock price, and analysts are projecting to earn right now $9.26 going forward. So looking at that first price to earnings, ratio, the first metric in our stock screener. It's time to put the stock price over that expected earnings, and you actually calculate out to a price to earnings of 17 for Lowe's.
Oh man, so let's see, where does Home Depot stack up against Lowe's? Home Depot's share price is $264.55 at the time we're shooting this video.
Wow.
They have their forward earnings are $12.38 per share, so that gives them a PE ratio of 21.4. So man, Home Depot's trading at a slight premium here to Lowe's, but both of which are cheaper than the market right now, which is trading at 35 times X.
Uh-oh, he's getting the Hogan leg drop right now on that first metric.
Yeah, that's a winner for Hulk Hogan right there.
But I will say that that is significantly below the overall market, which is trading between 35 and 40 times earnings. Again, at a level that we haven't seen in over 10 years. So just got to be aware right now, the overall market is trading at such a high level. So both stocks are below it.
Yep. So metric number 2 is the dividend payout ratio. Again, in our screener, we look for 60% or less. We think that gives the shareholders a nice reward there for a dividend and allows a company to reinvest in the earnings as well to allow them to continue growing earnings, cash flow, and that dividend going forward. So Lanny, what is Lowe's dividend payout ratio?
You listen up, Jack. Lowe's dividend payout ratio, man, it's going to be right there, but it's going to be below 40% actually. So at a dividend payment of $2.40 a year, and with the analyst expecting over $9, you do the math, and that's a 26% dividend payout ratio. Not in the perfect range, but man, do they have room to grow that dividend, and it helps you, the shareholder, sleep at night. So Lowe's dividend payout ratio is very low, and it passes that good metric.
Yeah, so let's slide on over to Home Depot, who pays a $6 annual dividend. That gives them a dividend payout ratio, taking that forward earnings of 48%. So that puts them right in the middle of that perfect 40 to 60% dividend payout range.
Wow, perfect.
So while both of the companies do pass this metric as they're below 60, it's interesting that Home Depot has that perfect payout ratio. Lowe's is a little low. See what I did there? And from there, we're going to hold this thought until we get to our bonus metric, the dividend yield, because I would expect this trend to shake out when we take a look at their dividend yields too.
Yeah, so the expectation is with a higher dividend payout ratio, you would expect a higher yield.
Makes sense to me.
With the lower dividend payout ratio, because they pay lower in dividends, you would expect a lower dividend yield. And then there's that factor of the growth rate.
So let's move right over to metric number 3, the dividend history and the dividend growth rate. What we are looking for is that long-term dividend growth history. Not every company is a dividend aristocrat, 25 years of consecutive dividend increases, but we want to see that a company has demonstrated some ability to increase their dividend over time. So like we have with all the other first 3, Lanny, what is Lowe's dividend history? Why don't you throw some metrics our way?
So Lowe's dividend history is strong. And again, as an investor, you want your income to grow because as your dividend is being received year after year, you want to see a company grow your income every year that you own that stock. And Lowe's is that company. They've increased their dividend for over 55 plus years and are actually at 58 years.
Oh,
Crown them. I'm the king of the ring here because Lowe's is a dividend king, not just an aristocrat, but a king at 58 years. Now, their 5-year growth rate is strong as well. How many here get raises at their employers of over 17%?
crickets. I mean, it's sure there are going to be some, but typically no.
So Lowe's 5-year dividend growth rate, shock factor, is over 17%.
Yeah, fantastic stuff. Let's see how Home Depot stacks up against that because the two competitors, I wonder if it's going to be similar. For Home Depot, they are not a dividend king. They are not a dividend aristocrat. They've only increased their dividend for 10 consecutive years. So that's interesting to me. That's not the longest of
Still
dividend
positive.
increases. Yeah, very strong. They've increased it for a decade there, so great stuff.
How old Bert is, 10 years.
Yeah, maybe.
With facial hair, it's crazy. The kids can do these days.
Yeah, the hell. But anyway, that's I don't know what more to say to that. But they have a solid one, but Lowe's in my mind is obviously a stronger history of increasing their dividend. But Lanny, we are going to take your 17% dividend growth rate and we're going to raise it to 20, almost 21%, because Home Depot has a 5-year average dividend increase of 20.8%.
So both have significantly high growth rates, and Home Depot edges Lowe's in that category, but then Lowe's edges Home Depot in the history standpoint.
So it looks like we're going to call this one probably a draw here, because both companies look very well and balance each other out in the metrics where they're weaker.
So stepping into that bonus metric, one that may, shake things up here, maybe break the tie up a little bit, is that dividend yield, which the dividend yield is how much is it going to pay you right now to own that share of stock. Now, the dividend yield is not the primary metric we look at. It's kind of, okay, if they pass all these metrics, how does the yield look? Similarly, if they had a yield of 0.25%, we're not buying it. But if the yield makes sense, then we'll probably consider buying it.
Yeah, and one of the things we always look at when we're looking at dividend yield is just where is their yield line in compared to the broader market as well. So currently the S&P 500's dividend yield is about 1.6% at the time we're filming this video. So we're going to look at that and use that as a benchmark to see how these two companies compare to the market and against one of each other when we're looking at this dividend yield. That's the background. Let's look into this bonus metric. Lanny, you've kicked off the first 3 metrics. Kickoff number 4. What is Lowe's dividend yield?
So Lowe's dividend payment is $2.40 per year, and at a share price of $157 and some change, they actually only yield 1.5%, so below the S&P 500.
Interesting. And Home Depot, to compare, is yielding about 2.3% at the time of this video. So circling back, this kind of completes what we were talking about earlier. Home Depot has a higher dividend payout ratio and a higher dividend yield accordingly. Lowe's has that lower dividend payout ratio and a lower yield. So at least it matches that trend that we were predicting we were going to see at the end of the second metric.
So, in summary, Lowe's has a price to earnings that's below the market at 17, a payout ratio at 26%, growth rate at over 17, and have grown their dividend for over 58 years with the dividend yield of 1.5%.
In Home Depot, it has that price to earnings ratio of just over 21, the dividend payout ratio that is oh so perfect of 48%. They've increased their dividend for only 10 years, but they have a 20% 5-year average dividend growth rate, and their dividend yield is 2.3%, a premium to the market, but definitely not the highest one out there.
So the winner of this battle, I don't know. What do you think, Bert? Are you going to raise the hand to yourself on Home Depot?
I don't know. I mean, it's not the metrics are solid. They're not terrible. I'm not running and buying them right after we film this video. They're worth considering and keeping an eye on, but from there, I just want to wait and see a little bit more and see how things continue to play out in this sector. I don't think either company is declared the outright winner. What about you, Lanny?
I look at, okay, they're doing well because of all the projects that people are working on at home, but how many projects can people keep working on at home with the stimulus still in question? Unemployment is now, I think they had more claims rise a little bit, more people filing for unemployment. So I'm really not sure going forward what's going to happen. I worry with Home Depot with that higher payout ratio. Can they keep that 20% growth rate? Probably not. Lowe's probably can sustain a 15% plus growth rate going forward. Similar to what Bert said, there's not something on these pages that makes me scream a buy, like I need to buy this dividend stock now. I'm not going to run and buy this dividend stock right now. I'm not going to declare a winner. I'm going to say that they both got counted out in the ring.
So what we're going to do is we're going to take Hogan, we're going to take Macho Man, and we're going to see you at WrestleMania for part 2 of this showdown later on in the year.
So there you have it. No clear winner here. Is it a bad time to buy any of these 2 dividend stocks? No. You can create a position now and monitor that going forward. If you are interested in buying something out of this category, I wouldn't put the full boat in, but you could grab a couple shares if you wanted to, and then kind of relook at it in a little bit to see where the prices actually shake up.
Yeah, I don't think that's a bad answer. So please let us know what you think about Home Depot versus Lowe's. Do you prefer one of the companies? I just wanted to kind of know also where you shop at between the two. I think that will be some kind of unique user information that we can see as we further pick a stock, because if one's trending other way. But that's not the main point. Let us know what you think of the companies, what you think of our analysis, and whether you would pick Hulk or Macho Man here, and see what we're going to do.
The other thing I want to mention is thank you again for allowing us to cross that subscriber threshold. We cannot wait to bring you that video. We've been working on it. We're trying to make it special for you. If you haven't already, give us a thumbs up, because again, if we hit 500 likes, we're going to come out, because of the craze with Pokemon and the nostalgia that Bert and I had back from 20 years ago in the late 90s, early 2000s.
I had that red cartridge.
I had blue. And you better believe we had the golden yellow Pikachu Game Boy as well. But we want to come out with a video surrounding investing in Pokemon cards and investing. So hit that 500 likes. We know that there's enough people watching this channel.
We see you out there.
Yeah, we want to make the video, but we need some, you need to see if it's worth making it for you, the viewer.
Help us help you.
Help me
help you.
Again, we appreciate you for coming by to the channel. Hopefully you had fun and you're learning something. Again, give us any feedback in the comments. This is Bert and Laney from the Dividend Diplomats.
Over and out.